You just checked your credit score. It's 670, and right next to it, the word good. You're relieved. It's not bad, it's not fair, it's good. But what does that actually mean? It feels a little like getting a B-. You passed, but you're not getting any scholarships. Is a 670 score good enough to get a house, a car, or one of those fancy airport lounge credit cards? Today, we're putting that good score to the test. We're going to uncover the surprising approvals, the quiet rejections, and the very expensive truth behind that one little word. First, let's be clear. According to FICO, the good range is 670 to 739. So at 670, you just crawled out of the fair category. You're on the bottom rung of the good ladder. And here's the key. Lenders don't just see the word good. They see a number that puts you in a specific risk category. To them, a 670 is a world away from a 739. Lenders see you as a near-prime customer, not a prime one. You get invited to the party, but you have to pay a much higher cover charge than everyone else. Let's see how much that costs. Can a 670 credit score get you a mortgage? Yes. The minimum for a conventional loan is typically 620, and for an FHA loan, it's even lower. So you apply for a $350,000 loan, and you're approved. But here's the catch. The rejection isn't for the loan itself. It's a rejection of a fair interest rate. With your 670 score, a lender might offer you a 30-year fixed rate of around 7.8%. But your neighbor with a 760 very good score gets offered a rate closer to 6.6% for the exact same loan. That doesn't sound huge, but let's do the math. Your monthly payment would be about $2,522. Your neighbor's payment is $2,243. You are paying almost $280 more every single month. Over 30 years, you will pay over $100,000 more in total interest than your neighbor. Your good score just cost you 6 figures. Let's try a $30,000 car loan. Again, with a 670 score, you'll get approved. The finance manager will shake your hand and tell you you're covered. But that 670 score puts you at the very bottom of the prime category for auto loans. Based on recent data, you might get an average APR of around 6.7%. Meanwhile, your friend with a 740 score gets a much better rate, closer to 5.18%. On that $30,000 loan, your monthly payment is about $21 higher. That doesn't seem like much, but over 5 years, you'll pay $1,260 more in interest. It's not as bad as the mortgage, but it's still over $1,000 you're lighting on fire. Now for the fun stuff, those premium travel rewards cards with airport lounge access. You apply for a top-tier card. What happens? Rejected. This is where your good credit score hits a wall. While you can get plenty of great no annual fee cards, the elite products are almost always reserved for people with very good or excellent credit, which typically means a score of 740 or higher. Banks see a 670 as too risky to gamble their most expensive perks on. That door is slammed shut. So is a 670 score good? It's good enough to get you into debt, but not good enough to get you the best deals. It costs you money. The real goal is to get to very good 740 plus. The good news is it's simple. Focus on the 2 biggest factors of your score. Payment history, 35% of your score. Pay every bill on time. Set up auto pay for at least the minimums. Credit utilization, 30% of your score. This is your card balance divided by your limit. Keep this ratio below 30%, but the pro move is to keep it below 10%. A 670 score gets you in the game, but you're paying a penalty. It gets you the mortgage, but costs you $100,000 extra. It gets you the car, but costs you over $1,000 more. And it locks you out of the best credit cards. 670 is a sign you're on the right track, but the journey isn't over. It's about understanding the rules and making small moves to push your score from good to very good. That's what saves you thousands and changes your financial life.